Good morning. This is 310. We are reviewing 100 charts, and I will start with the indices. We have some people in the room live. If you can't make it, you're watching this at home. There will be 3 videos, each broken up with 1/3 of the tickers we're covering. They are alphabetically sorted, so you can skip through and find the tickers you've submitted or the tickers that interest you. Fast forward and go to the next video and find it. Also look in the description. We have a very generous member who actually gives us an indexed links, so you can click on each individual ticker and it takes you straight to that part of the video. We can't expect it every time, but he does do it. Thank you very much, Ray. We appreciate it. All right, let's start with the indices. And I'll start with the SPY. We had a rough day on Friday because it's a one stock market. We have Nvidia. Nvidia rallied like $100 and then fell about $100, something like that, and it took the market with it up and down. So you're going to see a huge spike on the Friday pre-open and open, and then a big disappointment during the day. It felt very bearish, but if you look at the scoreboard, it wasn't that damaging unless you're looking at the NASDAQ. So hold that thought. All right, we're looking at the S&P SPY. We have high levels, of course, new all-time high on Fridays, but they are pretty pointy, and I'm going to focus. We're going to focus on the NASDAQ, and I'll tell you why in a minute. We do have CPI, which is probably the most catalytic day as far as emotions. If you remember, the last CPI was very hot. The absolute CPI number, 300 and whatever, 308. They're expecting like a 3% increase year over year. So it will have to be really, really hot for them to get disappointed. And I think if they do, they're going to throw a fit. And if they don't, they'll have a relief pop. And here's what I want you to focus on. If we do get a pop on the CPI day, how does it perform versus the Friday pop? Okay. Friday was about the jobs number. And I think they misread the jobs number, but we'll see the net effect of those two things by the middle of next week. All right, my focus is on the NASDAQ, and I'll tell you why in a minute. So how do I treat this? These lines, I would look at 516. It's not a flat number, but give or take. If you look at 516, it's line 1 that would indicate the bulls are trying to get more momentum, and they could do it. The Qs is what I would focus on. They had the worst day. They were down 1.4 versus 0.6 on the S&P. But you can see all they've done is just come back to the mean. They've done it before. They come back to the mean of this. Actually, they're trading the middle part of the huge channel that extends years back. You can see the green and the blue are the outside limits. Sorry, the blue and the blue are the outside limits, and you can't see the other blue. The 2 greens are the middle parts, and the red is the absolute middle. So they're still in control. You can see at higher lows and higher highs. So the follow through is what matters. So for example, next week, if we fall below 434, I would expect them to fall to 429. And we'll see how they deal with that. So focus on the mega caps, the large companies, the 5 or 6 large companies. So that is the Qs. The IWM, we've had that in focus, and I just added these lines. They're a little bit messy, but I'll explain them to you. Again, huge spike on Friday. I mean, they busted past a whole bunch of stuff, past the closing level that I've been watching for weeks. But because they did that in such violence, now I feel like I see that they have a lot of hurdles to overcome. So the data better be extremely pleasing to the expectations so they can be able to bust past these huge candles. This is a 2-hour candle. So for 4 hours, they are enjoying a beautiful rally, and then they spit it out. The scoreboard was flat. That tells you how high they went before they went to flat with that giant spike. They can beat it. They beat this one, and they beat these. So the dip is still available from last week. So that's the big picture. And now we're going to focus on each individual ticker. I'll start with Apple because it is A. Apple's in the hands of the bears. All that the excitement in the indices is not reflected here. You've heard me complain about the leadership in Apple for years. This is the proof of it. It's being passed NVIDIA is an inch away from passing it for the second largest market cap on the planet. You've heard this right. NVIDIA is within an inch of passing Apple. Microsoft passed it. Imagine Apple falls from 1 to 3 in the span of a few months. That is the direct result of a boring CEO that does nothing but borrow money and pay dividend and buybacks. Okay, 3 arrows. 1 came to fruition. That was my target. 2, that was the split between my target and the actual target. So I'll say it this way. If Apple doesn't recover 180, it's probably going to drift lower to 162, 161. I'm not going to go past that. There is a worse condition to talk about, but let's take one step at a time. They have sellers at 176, so I would not hold calls in Apple unless I think the market's going to break out in a major way. So 176 zone is difficult. I would exit if I was holding calls. And if they take out 180, then we can talk about them recovering some dignity, but they have huge resistance above. Great P&L and all, but leadership will kill a company regardless of how good it is. It has years. I mean, it's a beautiful company still, but those are my thoughts. ADA, I assume you wanted ADA, USD. Well, I did a little video on that one. See if you can find it. So Cardano is a competitor to Ethereum. I'm not a fan of Cardano. I hold Solana, which is a competitor. So I'll comment on this chart. A lot of support and an easy breakout. So if I'm right about Ethereum breaking out to its all-time high, this one should have the opportunity to break out. I have a lot of little coins like that I monitor that are doing the same thing, like Mana, for example, which is, anyway, it's not similar to ADA, but it's the same concept of struggling coin trying to make back some prior profits. So it's okay. I don't mind it. You have the opportunity to break out from 80 cents. Adobe, this stock is stuck inside a bunch of important lines that have been here for months. Almost like Apple, but a little further along. They broke down from the 570 area and they need to recover it. So that green box you see that's labeled resistance should be a problem. If you want a specific line, I would think 583-ish, give or take $1. Now they must hold the lows they placed in the last couple of weeks. If for whatever freaky reason they lose it, the 528, for example, I don't know how low they can go, 480, 470 in a series of lower lows and lower highs. What do I mean by that? They're selling rallies. Rally sold, new low, rally. If it's being sold and it makes a new low, it'll go to 509 and lower. Potential target if 560 is lost. Those are my words. 560 is that guy. So this is the potential target. Those are my words from a while back. That is still correct. Shorter term, let's see if I can give you more pointy lines. 565 is a problem area, but it is also a catalyst. So if they can take out 566, they have the opportunity to get back to 580. Repeat those same exact comments against 580. That will get them to 597. They will need the market's help. ALB, at one point, I thought it was a buy the dip opportunity, and if somebody did that, I didn't because it's too small of a company and I don't know it enough. So I opted out, but that would have been buy shares, and if I did, I would be exiting here. I don't know much about follow through with this company. I honestly don't know the fundamentals very well. The P&L kind of scares me when there's a drastic change in the yearlies and then you go to the quarterlies and there's the drastic changes on the downside for earnings. Scary. So it's a trading stock for me, and this is not an obvious entry. If you're an investor and you accumulated an entry point, I wouldn't add here. Leaving room to add later. AMD, so I made the comments. I'm going to do a special video on these two. The bottom line is AMD is in serious trouble if they don't deliver like NVIDIA did. The short story is NVIDIA blew past AMD. They were neck and neck, kind of the same type of companies coming out to beat Intel, the giant. At one point, very recently, Intel was larger than both of them put together twice. And now NVIDIA is in a different league all of its own. AMD's rally is on riding the coattails of NVIDIA. If they don't deliver a headline like NVIDIA's last year's May headline, AMD has got a crash coming. The least I can do is not chase it blindly. I can trade it up here, but if I'm an investor and just now I'm deciding to buy AMD, like I would love to talk to somebody that bought it at 227 yesterday on Friday. I want to know their timeline, like how far out are you looking? Because if they don't deliver a headline like last year's NVIDIA, and I think it's already priced in, that headline will probably cause it to sizzle one more time, and then fizzle. I've just made that up. You're welcome. I think AMD's entry points here are pretty dangerous. I personally wouldn't even touch it until it goes down to the 180s. I want them to erase that giant rally based on whatever. And I had a critic on this conversation in the live room, and he was right to say it. He said, well, if you said that about NVIDIA when it was 200, you wouldn't have gotten in. But NVIDIA has had 40% corrections between 200 and now often, if I'm remembering correctly. Same with Amazon. Oh, if you bought it at $14, you still own it now and you're a zillionaire. Yes, but it has lost half its value almost every year. No, 30%. I remember dips of 30% almost every year in Amazon. So you do have bad entry points and good entry points. And if you don't stop out, then yeah, it doesn't matter. And if you have a long enough time frame, it doesn't matter. But that's old school, and that's not me. I definitely don't buy and hold for 30 years. I want to get the best entry possible without being too picky. At least a reasonable entry, and this here is not a reasonable entry. How about an acronym of NOPE? Not an obvious point of entry. Speaking of Amazon, there it is. Amazon is still trying to get to its all-time high, right? So it's one of the ones that has not hit an all-time high. But we did speak about how much resistance there is up here last week. So 188 plus would be an all-time high. Taking that out would open the whatever doors because there's no resistance. Entering here, you're closer to a target. I've had this red line here for a while. I don't buy longs into a prior target that I had drawn. I feel like I'm late to the party. Just like the S&P, it needs a dip at least into this giant weekly candle from early February, which is 160 at least. So $15 dip from here is not a disaster, nor is it impossible to wait. If indeed I have a long-term horizon, why does it matter if I miss out on 5% or get in 5% too high, right? Isn't that the logic? So I don't feel rushed to get into here. They could break out, but we're looking at 180 versus 171. Those are the immediate lines. ANF finally, geez Louise. So this stock, you've heard me complain about it. I've lost money, tried to short it. It was one trade. My beef is look at the P&L down below on the bottom right and look at the stock. This stock up until last week is more aggressive than NVIDIA, which actually doubled its income and more than doubled its profit. I don't understand this over that. Someone explain that to me. Website satisfaction or whatever, shouldn't it matter what they put in their pocket? They're not growing the business and they're not making more money. How is that possible? Those are my questions. So the least I can do is not catch the falling knife because I feel this is a machete. And I would not be surprised to see disasters in here. I don't know what they were expecting. I'm not an expert, and I already told you I lost money on it. I walked away from the chart because I don't want to deal with it. If I have so many questions, I would rather trade something I don't have questions in. Rallies into 128, 130 should be met with sellers, and that would be a change in behavior. We already see it twice. Every dip was bought ferociously for the last few months. Now we had a dip that resulted in a lower low. That's the first time in a long time. So that's a change in behavior. So my take is that it could repeat it. So these, although they might not be that aggressive, I feel that pops will result in a lower lows. So what I would say that this zone should be now resistance, and any rallies into it should be met with sellers, and this might happen. Okay, might. I'm watching for this change in behavior, lower lows and lower highs inside of a descending channel. I don't know how steep, I don't know how wide, but that's what I'm looking out for. Have they started to sell rallies in this incredibly winning stock? APD, I don't know what that is. Off the top, this is exactly what I'm talking about. A stock that sells rallies, and they're going into a prior support that they lost. So I would imagine the area into 256 is an exit, not an entry point. If you want to see if it's solid, you should see them stabilize at 232 or above. If not, it might go back to 212, if not lower. So if I'm looking to buy calls or get long the stock, I would be patient, maybe at least into 236, 235, at least into this candle, which is 237 or below. Areas of interest, 233, plus or minus $1. APH. Okay, yeah, but I don't know what you're asking about here. Are you looking to get long? The chart's not going to help you. Well, it could help you. This is a target of, let's see here. Almost. It's almost at a target, but it is a target-ish. So for me, this looks like an exit, not an entry. I'm speaking only from the charts. Again, I'm looking at sales and profits. This is just the very top line dissection of the financials. And the stock is exploding higher like it's been mispriced for a long time. So do your homework if you're investing. The trading part is buy the dip, but I wouldn't touch it from an investment perspective. Levels that matter, 107, 106, 105 zone. Another level is 99. We'll see how that happens. ARM, there's another stock that's going to come down to earth. Amazing P&L. By that I mean like really amazing, like unusually amazing. Their gross margins are huge, incredibly huge, and the operating margin is incredibly bad. So something happens in between the gross profit, because they don't sell widgets, they sell ideas, and then operating costs just eat up everything. It just doesn't make sense. The hoopla of AI is going to hit a few stocks, and then the rest is just hype. This might be one of those few stocks, but technically I just can't get behind it up here. You do have support at 120 to 116. If you lose that, you're coming down to 96. It's almost a guarantee. So what the bulls need to do is get out of 148. I'm going to put a box at where they need to beat and where they need to hold. 2 boxes. Where they need to beat and where they need to hold. So this is likely the zone, and this is a catalyst for this zone. If you lose the first box, you're going to come into the bottom of the second box. And if you lose the second box, you're going to come into this area. If, okay? Conversely, up here, catalyst, breakout. ASML. All right, here's another one where awesome P&L, look at it, but flat as a pancake. What's this? This is the anticipation of whatever is going on. Whatever is going on in AI everywhere else. Look at this giant gap. I would have gotten out of the stock because I'm a trader at heart. I'm an investor, but from the sense that I only trade good stocks. Like I don't trade junky stocks. And this is a good stock. Look at that P&L. It's beautiful. But this price action should have a better P&L change. So if they know something about the future change in the company P&L, then that's great. Otherwise, what's going on here needs to be revisited. So it's 989 now, and there's a very weak point in the chart at 840. NVIDIA has that weak point, but NVIDIA's P&L, I will show you the difference. This is a beautiful way to visualize. Look at this difference. The revenues from last May were at this level, 6 and 7 billion. Now they're in the they're in the 22 billion a quarter. Do you hear those numbers? They went from 7 to 22. They tripled their revenues. Look at the income. The net income, 2 billion to 13 or 12. Quadrupled their net income. That I understand, leaving gaps behind. But ASML hasn't done anything. It's just flat as a pancake. It's all the promise of future things to come. They better come. Otherwise, you're going to fill that gap below. So if I'm an investor, I'm totally chill watching the stock. Or at least sell puts to own the shares instead of owning them. AVGO. This was, last year I said NVIDIA stock of the year. This was second stock of the year because late in the year, the report from AVGO levitated the whole sector, and they took that huge, of course, fueled by Powell, they took that huge rally into the end of the year and just blew the bears apart. They literally just demolished the bears in just a few weeks. So this one played a big role. Good company, good P&L. You can see the sales are increasing, but not the bottom line, but I can take that. I think they'd be better entry points. You're going to hear me say that all the time. For now, the traders have the advantage as far as on the buy side. They're buying dips, higher lows and higher highs. Look for a change in that. When? If AVGO loses the bottom of the earnings report, which is 1280. I'm going to add an alert here. Losing the bottom of the earnings report, you will end up at 1200, if not 1160. Okay, so I'm going to say earns low. What did I say? 1180. I forgot the numbers I said. 1200 or 1180. Okay, so that area. The big breakout looks like it's from 1150-ish. All right. Patience. And of course, if you take a new high out, you take another leg higher. BCE. Ooh, that's, I don't know. Falling into support zone, it could rally to 37.6. You do have a problem that they need to get to 37.5 like ASAP to get that opportunity to go up even to 39. But the risk is that they lost a very big, or they're struggling to hold a very big bounce level from October. Lower lows, lower highs. This better be your floor. If not, you're opening the door for 31 and unknown territory below. Every potential, look, watch this guy right there. You lost this one, you filled out the potential downside, which is that much, $11. You're just now getting to $11, losing that point. You see how they tried to recover it? Well, same here. You see that? So if I were to draw another battle zone, it's right there, right? And now they're doing the same here. So this is in play. If they lose this, like they lost this one and that one. That's what I'm saying. Dangerous. So be careful. Do your homework. BITO. All right. I've covered crypto quite a bit. My journey has been documented with us. In 2021, late, I said exiting crypto. I think a major correction is coming down to 22 or 19. We had that. We got in at the lows and we rode it up. If somebody's now trying to buy crypto, good luck. You might make money in the long run, but you better have a really long term, like at least 5 or 6 years horizon. So what do? I watch Ethereum. Bitcoin made an all-time high. This is not Bitcoin, but it does move with Bitcoin. This is a company that trades Bitcoin stuff and then tries to mimic its own ETF to show the Bitcoin price. So I wouldn't accumulate this thinking I'm accumulating Bitcoin. This one pays a huge dividend only when they have good reports. So it has pluses and minuses. This here is not an obvious entry point, although it does have room to go to 35. Okay, my reasons are for tracking Ether. If Ethereum hits its all-time high, I would exit because it's probably the top for crypto for a bit. I wouldn't short it. If you wanted to short Bitcoin, you can buy puts in BITO. Buy them in the money, out in time. That'll be shorting crypto temporarily. BMY, I don't trade that stock because it's totally unpredictable for having such a predictable P&L. Look at the P&L. It's like a static. And look at the stock price. Like it's going out of business. So something is going on with Bristol Myers. Levels wise, 56 looks scary. You can see how they lost it, and it's going to be a problem to retake. This little jag right here is somewhat bullish that has a target of 59. So they could do it. Let's zoom in. If I look left, okay, so check this out. I'm going to copy this guy. Actually, I'm going to move him all together. This is prior behavior. So let's see if they do something like this. I'm speculating because they're going to go into this candle, There is resistance at 55. So maybe I can raise this a little bit to touch 55. So if they do this, it's not bad, because then they have a higher low and they can come back and take that out. You're welcome, John. I am recording. You can watch the rest. Somebody's leaving the live room. Thanks for being here. We have like almost 50 people here on a Sunday. All right. So not rushing longs, but you can, knowing that 55 is going to be resistance. BP, oil company, I don't know exactly if they're a pure refiner or not. You can do homework on that. They do have a breakout level where they're at. They're trying to compete with 37. You can see big gap. I'm not a fan of gaps this big, but it is a big catalyst. If you can take out 37, you can get to 38.50 like this. So the way I would handle that, buy the dip into support. So if it gets to 36, you get long to try to get to that. There are a couple of weak points. There's a weak point here, which could be the target 1, and a weak point here, which could be target 2. Well, this weak point has a lot of support below this red line. This red line is moving. It's a high point of volume. If I zoom in or out, it's going to move. So I put the yellow line where it is to help you visualize it. So buy the dip here and see if they can do this. That looks pretty tough to beat. Look at it. But that is your catalyst. That gives you about $1 of upside from here. I feel like there are better trades. BX did almost exactly what we expected, a couple of down arrows, and now it has a lot of resistance. So this guy is stuck. They have sellers above 129 and buyers below 122. I don't think they have oomph to do either. It's an okay company. It'll go with the flow of the market. Earnings are in 39 days, so it's stuck for now without a catalyst. Now, target 2 has not been officially met. So if they are selling rallies and they just repeat what they just did from here to here, this was a rally. So maybe they do that. Focus on that would meet this target. And target 3 would be 119 of this red W. I didn't put it there. I just put targets 1 and 2. Target 3 is 119 or 118. Not necessarily meeting it, but it's a caution. Cracker barrel. Very tough word for me to say. I believe that's for Tom, unless there are 2 people interested in the stock. All of this did not come to fruition. They were looking to short it, and I think. So now what happened is they lost a neckline, they are trying to recover it. So if they don't get to 74 and then hold 72 and 71, I think they're going to get back to 65. There's a chance they would do that. There is a lot of resistance now above, like this candle right there. Woof, resistance for sure. And this candle here, I'm left mouse clicking now because my neck hurts. So this is doable. I don't want to say all the way to here. So they have a fight between 72 and 65. That's the consensus here. 72 to 65. If you lose 65, you're going to the 50s. I guarantee it. Whoops. CCJ. I shorted this guy and won. It wasn't easy. Wow, look at this W working. It's magic. So from here on my screen, I don't want to gloat. Here's my screen back in late February. I put an arrow available, and then a dip is available, and this is a potential path. Well, we just did that. We popped into the available piece, and we priced it out almost instantaneously. How weird was that, right? It's not a coincidence. My arrows are not coincidences. Look left, and you will see the arrow placement. It's just below prior contention. So now we have created a couple of things. 1, catalyst right here to get you to here. 2, lose this support and finish my job. So what now? I would hold it if I'm long, or if I bought the dip on Friday, and get out if they lose the support. So If you want to be long with a tight stop, that is the right thing to do. If you want to short the pop, the next pop into 43, hoping they curl back down and get to 37, you're also correct. So it's a trading thing. If you're an investor in this, have at it. I think you need to do homework on the future of this company's asset. All right. CCL, very passionate fans of the business and of the stock. So look at this bowl I drew in red. I'm going to make it fatter so you can see it and know that we know what we're doing. And I'm going to probably try to move it around, sync in layout grid. So I'm going to scroll out to show you what it looks like. So it's not a bearish thing, but I'm going to give you caution. The cautious part is that now we have a lot of resistance here, and it's a zone. It's not one line. So this better break out and get to 1850 or 19. Otherwise, you're at risk of doing this and retesting this zone area. Now, if you lose that one, you're going to retest. There's a weak point here. Okay. So I'm just giving you the plus and minus. Which way it's going to go, I don't know. 11 days until earnings, so that will have a lot to do with it. So quickly, they need to recover that neckline. Otherwise, the earnings brings about the possibility of 11 or 20. So it's a lot of guesswork. And if you don't believe me, let's get into the live room and I can prove it to you mathematically and with evidence, thanks to NVIDIA. What happened since last year until now, I have so much evidence to convince people that if you're taking a giant position into the earnings, you're gambling unless you're selling strangles and straddles. You're just gambling on the directional. Directional bets on earnings are pure gambling. You can do all the homework you want. Okay. CELH, Celsius, energy drink, one of the ones I don't understand. Again, look at the P&L and look at the price action. So this is a meme stock. I wouldn't touch it with a 10-foot pole. Why? Because I don't know meme stocks. I'm not in the meme rooms. No way this is deserved based on value, based on improvement in outcome. Let's look at this valuation real quickly. I honestly, first of all, I do drink. I'm a connoisseur in those drinks, and this one does nothing for me. It's a placebo. People think they're getting jacked up, and there's nothing in it for me. All right, let's see here. Is it your gross margin is okay? Nothing alarming. Profit, operating costs look under control, so there's nothing alarming from how they operate their business. Revenues from Pepsi. 60% of their sales is Pepsi? Someone explain that to me? Huh. All others, Costco and Amazon. What the? So 3 companies control most of its revenues. I wouldn't invest in this company. If they lose one of those 3, the stock is going to come crashing. Unless those 3 are actually invested in the company. Do your homework. That is weird. All right, so let's go to statistics. Price to earnings, I don't care. It's a growth company, supposed to be. It's not growing, but it's supposed to be. Let's look at the annual. Well, it's a growth company on the annual, but for the last 5 quarters, it's iffy. Price to sales is what I care about. 16 is not cheap, definitely expensive, but it's not alarming. Another thing I'd like to look at, the P&L is one thing. Growth is there. The cash flow to deliver the growth, not alarming. Okay, so I wouldn't short it because it's rallying hard. I would definitely look into, before I invest, do some homework at these levels. Technically, this is a target and then some. The breakout from this neckline, this red one at 63, was supposed to be $13 or $15. This is going on 26, so it's overdone. Not an obvious point of entry. Nope, not an obvious point of entry. CHTR, it could be a point of entry if they hadn't lost it, the blue line, okay? $300 stocks. If this was a $12 stock, I'd say nibble half a position, but with $300 stock, the downside potential can be 190. Not calling it there, but if they don't recover that blue line, in fact, if they don't get back to 310 to build a little buffer, they're at risk of drifting lower to 190. This is this scenario is really real if the market's correct this week. Because you dropped from wherever you came, you consolidated for months, and then now you're just losing consolidation. So the least you can drop is $75, which is $220. So not an obvious point of entry from an investment perspective. You can see it on the lower time frame. From a trader's perspective, you can buy the dip into 271 and into anything below 274, 275. You can try to get long to curl back up to get to 296 and stop out if it doesn't work. From a trader's perspective, tight stops. From an investor's perspective, I want to see them take that back. 308. CRM, it's in the stratosphere. I do like this company. I like how aggressive they are, but I don't like to go long into prior fails. You're saying, Nick, it went over. Yeah, it did. The whole market is on crack right now. So the easy upside targets have been met. So where's the rush? I don't understand this panic to get into the stock when it's looking like this. But I'm a long-term investor. If you are, it shouldn't matter if you wait out another 10% of upside. Just like you don't care about losing 10%, why do you care about missing out on 10%? That's the problem I have with this. CRISPR, well, on CRM, I guess I can give you lower time frame. Okay, what's going on here? We switched windows. Let's go. Lower time frame comments. 312, a problem. In fact, 310 is a problem. 296 needs to hold. Those are shorter term. 310 plus, 296 needs to hold. You have backup support at 291. If not, then all the way down to 278. That is I'm going to put an alert here for like a couple months from now saying big wick test from earnings late Feb earns. So I know what I'm looking at. Okay, CRISPR. Do your homework. Technically, problem at 83. Target 72. Arguably, they already lost the neckline and they're heading to 72. Unless they regain that neckline. If you want to see what neckline, I'm not a proponent of these sideways necklines like this, so I'm more of a level person. So I personally would say they're in the process of losing this level. Somebody stickler to trends, they will say, oh no, they already lost this level, and they'll draw a trend like this. To me, that's a little bit ridiculous. I mean, why connect these two dots, not these two dots, and say they lost it up here? Either way, they need to recover 81, 82. To avoid the downside target. What's the downside target? If you want the NIC target, remember Apple? I had 3 lines. This is the NIC target. So if they don't recover, how will it happen? A little pop that fails into resistance. Sorry, I hit my keyboard. And then it does that. And if you lose it, you drop below. You try to recover one more time. And if you do that, it's a guarantee down to here. Support 72 to 69. All right, that's not my forecast. I'm telling you that they're losing the neckline. If they don't come up above 82, that is my forecast. CrowdStrike. Couple people went long into the earnings and they got hurt in the initial stages, and then they recovered. This is an amazing price action in CrowdStrike. P&L was good. It's got a good reputation. My goodness, look at this ride from 290 to 380 back to the middle. So they don't know. That's what we call a doji. Let me zoom out. Do we get a doji on the one? No. How about a 1 week? I'll bet you. Yes. Have you seen the doji? Okay, let's mini lesson right now. Look, I wrote up anyway. The doji is indecision. It's a candle that shows indecision. So for that 1 week, this past week, they opened at 317-ish. They said, holy crap, we hate it. No, we absolutely love it. No, you know what? We don't know. Let's just close about where we opened at 322. That's indecision. So what does that mean? They kick the can 1 more week to decide the next week whether they want to commit higher or lower. And I'll go down to a daily chart, and I can show you that on Friday, they left a long wick at a line. 341.5. I do have an alert there and I don't understand it. Resistance node through 347. Okay, so we have resistance. And let's zoom in. Okay, you can see a problem at 342, a problem at 349, and a node at 345. So 342 to 349, huge problem. If they can't tackle it, they're probably going to drift down below 305. Keep that in mind. If you're an active trader, how signs, if you lose 315, you're going to lose another $10, I think. And you're going to struggle to take out 340, 339. Cisco, dinosaur, stuck in an earnings box from middle of February. I don't know what to say. I think it'll take a miracle for Cisco to go above 50.6. Good P&L, good company, proven pedigree, nothing to knock. It's just going to go with the flow. And right now they're selling rallies, lower lows and lower highs. I think it's easier to get to 47.8 than it is to get to 50.8. All right. So those are trading comments. If you're an investor in Cisco for the long term, there's nothing to do here. I wouldn't add. Holy crap. Well. Look at my lines. This I started here, the blue one. I said it would rally and it would fade and then it would bounce. So basically we are right here inside my drawing. This one is right here. Will we get to the bottom of my drawing? Pretty good to see your lines come into fruition, right? How do they say that? I love it when a plan comes together. I love it when a chart comes together. Chevron. Okay. In the last couple of weeks, a colleague of mine, I can call him that, sent out a trade long Exxon. And so I started looking at Chevron and Exxon. And the long was for this week. And my comments were, in the last 2 weeks, there was too much resistance from the options, nothing to do with charts. And my comment has been, if you get a spike, book it. I said it on every time they had a green day. And that is the reason why. You got a spike, and if you didn't book it, now you're red. And so it's important to pay attention to the weekly options, not just the monthly options, and the chart. This one can drift lower to 145 and find support because that's a high node of volume. If you lose 140 for some freakish reason, you're going to go for a ride to like 126 in a series of lower lows and lower highs. That's not my forecast. I see a lot of support below. It's a great company with great leadership. I'm curious to see what Exxon did break out. That was a good read on this part. So Exxon proved me wrong. Chevron didn't. Still, it's not wrong to book profits. So Chevron, it's a problem that Exxon is doing what it's doing, and this one isn't. That's the big picture for me. And here, 147.5. Let's say if you lose 147, you're going to continue this slide down to the middle of the 140s. So 144.5, 144. Short term, a lot of resistance above. So be careful with the Chevron. The Dow, it's the market with a couple of big stocks in it. So I focused on the mega caps, and they're important here. For example, Microsoft is a $400-something stock. It's a huge part of the Dow now. It used to be only UNH was huge, and I thought they need to split. Instead, what did they do? They raised a whole bunch of stocks up to that level. CRM is up there, Microsoft is up there, and those are the two that pop into my head. And I think there are two other ones. Home Depot, JP Morgan, they're giant stocks inside of the Dow, which makes the Dow, DIA, ETF, very unpredictable. One stock can make or break it. It's very unpredictable. It is a price-weighted average. And check this out. Overnight, we had a spike in Thinkorswim a long, long time ago. And look how pivotal this area is. So I'm going to move it over to here. You have resistance into 390, 391. And you need to hold 385. If you lose 385, you're going to end up at 381. Let's see what that means. If I say that, what does that mean? That means it would have a 2% dip. 2%. It's not the end of the world. Okay? But it is price action. But if you look left, what do we have? Bulls in charge. buying every dip, making a higher high. Assume that's going to happen. So assume they can get to 394. So you'd be safe shorting, not shorting. Okay, if you're short, you don't add. All right, DraftKings, almost similar stock to the Dow. Huge problems at 44. You can get there, hopefully before you lose 41. I think if you lose 41 or 40.8, you might slip to 39.50, and then you'll get stuck below a heavy volume node. In other words, see that yellow line? It's important. I don't remember what it says, but it's important to hold from a volume perspective. Near-term volume resistance. So they're still tackling that resistance. So big sellers above, they need to hold so they don't fall into this area of 39, because if they do, there'll be a big resistance above, and then it'll be easier to fall. DOCU, incredible reaction up. Look left. Anybody that bought it up here, I would love to have them in my group. I have so much to teach them. Look left, man. You don't buy a stock when it goes into a big disaster scene. Why? Somebody up here is holding a bag of poop, and you say, let me take that bag off your hands and I'll try my luck with it. And now you're buried down huge. And with before a day, you're suddenly down a bunch inside of one day. You're down 10% at least. So this is not an obvious entry point. And just like right here where it fell into is a natural spot to find support. 55, give or take, should be buyers. Why? This is an area from which they broke out. It's proven support and resistance. Look, they lost it here. It was a prior support. See, support, battle, lost, try to recover, lost. The earnings pushed them through. So here's what I'm going to tell you. They need to hold this so they don't prove it was a fluke that the earnings reaction was bad. So here's my prediction on DOCU. If the market's correct and it falls to 51.50, I think it sees 47 this year before it sees 56. But those are if. So hold that blue line so we don't have that conversation. It is support zone from here to 55. Hold it. Because if you lose it and you get down below that blue line convincingly, you're going to finish that blue arrow that I have and without a problem. The company is fine. The P&L is fine. It's going sideways when the markets can't stop rallying. That's not good. The attention on something else. ELF is like, at least this one, the sales are exponential almost. I still think the stock did too much. Only up to D. Yeah, I know. I'm taking my time. Let's see here. Financials on this guy. I want to see the statistics on it. 13 or 14 price to sales. You could look at the PE because they've had a PE and this is almost double what they've had. It's a little scary. It's just not an obvious investment start. It is tradable. It's very active. You do have buyers into 192. If you lose 192, you're going to 177. Alta reports this week. Thank you for that, Tom. See, somebody's on the ball. Alta reports this week, and it might impact this one and everything else like it. Good. Thank you. So be careful. I don't know what this is. Siemens. Huh. Okay. This is a target area. This is a resistance area. Anything above 14.4, I wouldn't get long. I think it's easier to get to 13.6. Trading comments. Investment, do your homework. Okay, we've done this. This is the S&P. I will have a special video later. We're not going to talk about it. There should be 51.60 and 51.25 attempts this Monday. We'll see. We're going to video number 2 in a minute.